Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. A tragic plane crash at Washington National Airport, the first commercial jet crash in the U.S. in 16 years. The latest developments from one of the country's busiest runways, plus the perspective of American Airlines pilot and union rep Dennis Tajer.
Know that every pilot out there is as close to this as you can be because we don't want it ever happening to us.
And Wall Street power player John Gray of $220-some billion Blackstone. Two letters having big impact on the portfolio, AI.
We're still growing our hiring, but there's definitely a factor here where these tools are powerful. If you think about summarization or graphic design, translation.
It's Thursday, January 30th. Squawk Pod begins right now. First up on the podcast, a tragic midair collision near Washington, D.C. Wednesday evening. An American Airlines regional passenger jet and an Army Black Hawk helicopter collided near Reagan National Airport and crashed into the Potomac River. Dozens of people were killed just as the American Eagle jet, which had come from Wichita, Kansas, was about to land. There were 60 passengers and 4 crew on board and 3 on the military helicopter. No survivors are expected to be found. There are more questions than answers at this early stage. American Airlines CEO Robert Isom released a statement late last night before heading to Washington for recovery efforts.
We understand and appreciate that people are eager for information. Please know that we'll continue to share accurate and timely information as soon as we can, but anything we must report must be accurate.
This breaking news did impact our planned coverage of the Federal Reserve and earnings results from some of America's biggest technology companies. To bring you the latest that we know, here is Squawk Box anchor Andrew Ross Sorkin.
We want to go over to Phil LeBeau, who's got a rundown of exactly what happened. Phil.
This, Andrew, happened just before 9 p.m. last night. We don't have a whole lot of answers in terms of actually what caused this, and that's going to take some time to figure out completely. But here's what we do know. This midair collision happened about 300 feet above the surface. It was an American Airlines regional jet on final approach to Reagan National, 60 passengers, 4 crew members. It collided with a U.S. Army Black Hawk helicopter, which was on a training flight. There were 3 soldiers on board. This is a map that shows you where that American flight was scheduled to land. And it's runway 33, the shortest runway. That's the approach that the American Airlines flight was on as it was coming into Reagan National. Both aircraft then, after the collision, crashed into the water of the Potomac River. This security cam footage, which came out last night, gives us a rare look at something we rarely see when it comes to an aircraft accident, the actual moment of impact, if you will. That light coming towards you, that is the American Airlines flight. There's another light that goes towards the aircraft, and then you see that flash. That is the apparent collision, again, about 300 feet above the ground. At this point, investigators are looking for the black boxes and how quickly they can recover the flight data recorder as well as the cockpit voice recorders. That will provide a lot of answers in terms of what happened last night. The NTSB is leading the investigation. The Reagan National Airspace, this is not a surprise to people who fly in and out of Washington. It is among the busiest in the country. It is not uncommon to see Black Hawk helicopters flying around while you were flying in or out of that airspace. Doesn't mean that it's dangerous. It just means that it is a congested airspace. We should point out this is the first U.S. airline crash since 2009. Robert Isom, the CEO of American Airlines, is in D.C., flew in there late last night. He's there along with their GO team to work with the NTSB, work with the FAA, try to determine exactly what happened that caused this midair collision.
Hey, Phil, before you go, they're landing close to, they're landing planes within 2 minutes of each other, supposedly, during this period.
Yep.
Throughout. And then you made this comment about, the helicopters being there, and that's not always unsafe. As a layman, you think to yourself, given all of the particulars of trying to get a plane on the ground and how many planes they seem to be landing at one given time, they seem to be one of the most sort of busiest times. How is it possible that the helicopters are running training missions right next to the airport?
Great question. I don't have an answer for you, Andrew. Look, they don't just pick a spot out and say, hey, let's go on a training flight. As you know, the FAA, air traffic control, along with the military, they work out the routes and the airspaces that all aircraft are supposed to be in. Now, did one of the aircraft, for some reason, stray out of the path that they were supposed to be in? We don't know. That will be determined by investigators fairly quickly, I would imagine. The fact that this is right there, so close to the NTSB, the FAA, the military headquarters, they should be able to get some answers very quickly in terms of, at least initially, why they think this took place.
With 64 souls on board. Thank you, Phil. We're going to go straight to Eamon Javers. He's in Alexandria, Virginia right now. He is near physically the scene of the crash. Eamon.
Andrew, that's right. It's been a long, dark, and cold night here for rescue workers as they hope against hope that they might be able to find some survivors here in the Potomac River. So far, no indication that any survivors have been found in the hours since the crash. The main focus of search and rescue activity is on the water. It's closer to the D.C. side. We're standing in Alexandria, Virginia right here. The search and rescue is focused on the D.C. side of the river for right now, and you can see officials out there doing what they can to see if they can find any survivors from this tragic incident. We heard from the DC fire chief last night. He gave a sense of just how difficult this is. Here's what he said.
The water that we're operating in is about 8 feet deep. There is wind, there is pieces of ice out there, so it's just dangerous and hard to work in. And because there's not a lot of lights, you're out there searching every square inch of space to see if you can find anybody. Divers are doing the same thing in the water.
We've also got a statement here. Take a look from U.S. Figure Skating. They are confirming that a number of figure skaters were on this aircraft. They say, we are devastated by this unspeakable tragedy and hold the victims' families closely in our hearts. We will continue to monitor the situation and will release more information as it becomes available. Those figure skaters on board the flight were returning from a national figure skating event in Wichita, Kansas. That flight directly from Kansas to Washington, D.C. The flight's only been in existence for about a year, but obviously this is a highly trafficked area, Andrew. And as you were talking about Ronald Reagan National Airport, which is just to my right here, north of where we're standing, the airport is now closed. It will be closed, they say, until 11 a.m. No aircraft in or out of the airport, no vehicle traffic in or out of the airport, Andrew. All of the access points to Ronald Reagan National Airport are blocked right now by police cruisers redirecting any travelers who might be showing up at the airport today. So this is going to be a major logistical issue as the morning goes on, in addition to the human tragic elements of what we saw last night. Officials are hoping against hope, Andrew, that they might be able to find somebody alive out there. Back over to you.
Eamon Javers in Alexandria. A lot to watch and to process, and of course we send our condolences and so much more to everybody involved in this situation. I want to thank both of them. We're going to bring you joining us right now is Dennis Tajer. He's an American Airlines pilot, a spokesman for the Allied Pilots Association. I want to welcome you to the broadcast. I know it's an airport that you've landed at so many times, that I've landed at. I think it feels very close to home for a lot of our viewers. Just your initial thoughts, given everything that you have seen come in around how this may have happened.
Well, it's devastating. And obviously, our thoughts and prayers are with the passengers, the crew on both aircraft, their families. There's just no figuring out how to handle this other than to take the grieving and try to heal. And to those first responders, they're risking life and limb to rescue and recover beyond belief the courage it takes. As was mentioned, and Phil just nailed it, and we all know it, DCA is a very congested airport. It's compounded by airspace restrictions to protect our capital from threat, those prohibited areas. What we saw happen is not an abnormal maneuver coming into runway 1 for the regional aircraft. We fly mainline and represent those pilots, but coming in to the basically the ILS to runway 1 and then maneuvering for the circling approach to 3-3 is a very common maneuver. Obviously, the collision with the Army helicopter is still yet to be determined. Investigation the NTSB will lead. We're going to have questions. We're going to be looking for answers just like the public, but know that every pilot out there is as close to this as you can be, because we don't want it ever happening to us.
Right. Dennis, I mean, I know you have questions. Tell us some of your questions. Even if we don't have answers, I think it'll be informative just to understand what the kinds of questions you would be asking about. I imagine why that helicopter was where it was. Obviously, it appears that when a helicopter is that low, given the radar system on it, that it becomes not unseeable, but a lot less visible, if you will, at least electronically.
I'm not certain of that. You know, the experts who work the radar site, the air traffic controllers, can answer that, and they will. And the NTSB, I'm sure, will have a preliminary at a minimum. The question we have is this helicopter traffic, and I've seen it plenty of times at DCA, and it's called out. It's cited. We have collision avoidance systems on the airplane, but that has limitations on it as well. So all the issues coming together. I'll give you more detail on it. On the aircraft I fly, the 737, I don't know that it's really that uncommon, but the collision avoidance will tell you traffic is in front of you. It'll announce it. And if you need to take an action, it'll direct you, climb, descend. As you get closer to the ground, rightfully so, that audio becomes inhibited. On my aircraft, below 500 feet, that audio doesn't come up. The alert is there, but if I'm looking outside the airplane to land, and that's where I should be focused, there shouldn't be any traffic at that low altitude. So there's a lot of systems that are there to protect us, but it's possible that some of those systems there was a proper hole, and here we are. But it gets into the realm of trying to speculate. And we just don't want to do that.
Well, let me ask you this.
What you've got to know, though, is DCA is a compact airspace, and flying at night is a challenge there.
But that's what I wanted to get to. So DCA obviously is this sort of super busy airport. They're landing planes almost every 2 minutes, in some cases even less than that. And then in addition to that, you add on just the number of helicopters, increasing number of helicopters it appears to be in the skies broadly around major metropolitan areas, including Washington, D.C. You're seeing it in New York City. Obviously, places like LaGuardia are also airports that are super busy and have tight spaces to get those planes in and down. And I just wonder, as we start to think more long-term about helicopter use, by the way, drones and everything else, how easy or challenging this is all going to be to maintain just this number of vehicles in the skies in this kind of close, compact spaces.
Andrew, you nailed it. As technology and these vehicles come along, we better have regulations and technology to ensure that when something goes awry, that error is trapped. It is ever important, and we're on the Hill, ironically there, and we're in the business centers saying, if you do this, you got to make sure you do it right. So you're right. And what is the procedure for the helicopters, those other aircraft flying in that very dense airspace very close to us? And what's not so much, you may have the regulation up there, but what if an error happens? How do we trap that? What is the system that traps that? Because you only have seconds as evidence in this tragedy.
Dennis, I want to thank you for your perspective this morning. As we've said all morning, our sympathies go out to everybody involved in this situation, of course, the families. We should note right now that NBC Washington, the affiliate there, reporting more than 30 bodies have been recovered during the search and rescue operations thus far, according to two sources familiar with those search efforts. Back after this.
We do have more to come up next on Squawk Pod. Blackstone is the largest investor in the data centers we need to power the booming growth of artificial intelligence. The company's president and COO, John Gray, joins us on the quarterly financials and why the alternative asset manager is long on AI when the competition is growing.
The good news is we own $80 billion of data centers, and they are long-term leased to major companies. We also don't build data centers speculatively.
You're listening to Squawk Pod from CNBC. And this next conversation is with John Gray, president and COO of the world's largest commercial property owner, Blackstone. With over $1 trillion under management, the firm has invested billions in the future of artificial intelligence, data centers to support the growing demands of AI, buying data center operators, and financing cloud companies. They're not the only ones betting on AI infrastructure. Remember the Stargate news from last week? That $100 billion minimum project involves Oracle, OpenAI, SoftBank, NVIDIA, Microsoft, and others. BlackRock, the world's largest asset manager, has teamed up with Microsoft to invest a separate $100 billion in the same idea. In this conversation with Blackstone's John Gray, you'll hear Andrew Ross Sorkin and CNBC's Leslie Picker. We'll start with Andrew.
I want to talk about Blackstone this morning because the private equity giant out with fourth quarter results impressive. The company reporting earnings and revenue above analyst expectations, helped by solid investment returns in private equity, also in the credit and hedge fund business. Some questions, though, about the real estate business. And, of course, we want to talk about infrastructure, real estate, and the spending on data centers, given all the questions about DeepSeek and its impact on all this. I want to bring in John Gray. He's the president and chief operating officer of the Blackstone Group. Good morning to you. Before we get into the whole data center question of the moment, let's just walk through the last quarter here because you did put up good numbers. The stock, by the way, up about 2% on the back of this earnings report this morning, John.
Good morning, Andrew. Great to be with you as always. It was a heck of a quarter for us, one of the best in our 40-year history. Earnings, distributable earnings up 56%, as you noted. The key drivers of our business, fundraising, investing, realization, were all at the highest levels in 2.5 years. We're very pleased with that. But what's really exciting here is the sea change we're seeing in terms of the openness from investors towards alternatives, towards private assets. And you see that in a couple of places. One is with individual investors, our private wealth area. We saw an 80% increase in terms of fundraising in 2024 through that channel. January was the best month we had there since May of 22. The other big area is private credit for institutions, for insurance companies and individuals that benefit of bringing them up right to borrowers, capturing some of the excess spread there. That's really driving high levels of growth. Our credit area in real estate and corporate credit has grown from $176 billion 4 years ago to $450 billion today, and it looks very bright as we go forward. So a great quarter, but this change in attitude towards alternatives is the thing that has us most excited.
Can we talk about the real estate piece of this? I'm reading a Financial Times headline, Blackstone's B-REIT hole keeps growing. What say you?
So on real estate, B-REIT, which you and I have talked about a number of times, I just start with that. We've delivered 9.5% returns to our customers for 8 years, beating the public REIT index by 65%. We're incredibly proud of that. We've made great decisions by investing in logistics and rental housing and data centers. We focused in the Southeast, Texas, Florida, Georgia. We hedged out the debt before rates went up. We've made a lot of great decisions with that. In terms of that technical question on a shortfall, there's still 4 years to go on that deal we made with Cal Regents. And even if there is a scenario with a maximum payout, we get paid full fees along the way. We also share some of the costs with our employees. And so the net cost of the firm is much less. But I think the bigger question is your point on real estate. And there, I do think we are in the midst of a recovery. The fourth quarter was tougher. There's no question because rates went up. But as you look forward now, the thing that gives us confidence is the way the conditions are coming together. The economy's growing strongly. That's helpful for demand and absorption. New supply is down by 2/3 in areas like logistics and rental housing. And we're seeing the cost of capital come down. Borrowing costs have gone from 9% to 6%. CMBS market's much stronger. So I'd say the slope of the recovery gets impacted a little bit near term by rates, but the direction of travel is clear. And that's why you've seen us really accelerate our investing in real estate.
Let me ask you one more B-REIT question, which I think relates even to the larger business. And then I want to ask you about data centers. On the B-REIT front, I think that model, this sort of quasi-liquid fund model, Obviously, there's been questions about it for a long time. But more importantly, in great success was going to be a model that was going to be used not just by your firm, but by many others, not just in the real estate space, but in private equity and some other kinds of spaces, to have this sort of quasi-liquid kind of fund available to the public in a unique way. How do you think about its success, or maybe I should say challenges, in terms of your ability and other firms that are trying to be fast followers of yours to develop similar kinds of funds, and whether you think that they will or they won't going forward?
Well, we see BREIT and its structure as a tremendous success. If you look at what happened to BREIT, it's managed today now in the last almost year to pay out 100% of requests. Over its 8-year lifetime, it's done that 85% of the time. And during the little over a year where there was more of a challenge, the semi-liquid structure worked. We paid the money out to our customers. They got substantially all of it in just a few months. And so we designed and described these products to our customers as semi-liquid. You are trading away a little bit of liquidity for higher returns. And back to my earlier point, we generated a 65% premium in returns. And so our customers are happy. And the proof of that is when you look at our new products. We had a new product launch here in January, and 90% of the financial advisors who invested in it had invested in one of our other products, the vast majority in BREIT, and more than 50% of the financial advisors had invested in our 4 flagship products here in the United States. So the customers recognize this work, but it's very important that the people who operate these structures have the right liquidity, the right valuation process, and do a great job investing. And I think if we do this, this is going to grow quite a bit.
John, as you know so well, last week we saw the emergence of DeepSeek, this AI model coming out of China that, at least from the tests that have been scored, seem to beat or at least be comparable to things like OpenAI and Anthropic and others at potentially much lower cost, much lower energy use, and all of it raised profound questions just about the CapEx, the amount of spending that's been going on, both for chips, for energy, and invariably infrastructure and data centers being a business that you've had great success with. Just take me inside the room. A week ago when you first learned about DeepSeek, there had been a collective gasp, I think, across many industries, and sort of how you have thought about it going forward.
Well, like everybody, we see it as a big deal. The way we reacted was we went out and called everybody we could at our companies, our clients in terms of those who lease space, technologists generally, and we wanted to collect information. And now, having the benefit of a week, I think you have a little more perspective. I'd say for us, as the largest investor in data centers, it is quite relevant. The good news is we own $80 billion of data centers, and they are long-term leased to major companies. We also don't build data centers speculatively. So this is a very prudent approach. But the question really is, what's the impact? And you've been talking a lot about it on your show. The cost of compute is coming way down, and the adoption and usage of AI is going to go way up. So what does it mean for the physical infrastructure? I think we got some good insights from the Meta and Microsoft calls yesterday. And what they said, Mark Zuckerberg said, physical infrastructure is a strategic advantage. They talked about sort of the fungibility of these data centers. Maybe there's less focus on training, maybe now more on inference, or in some cases on cloud. And so the idea that as we get more and more compute, we're still going to need a lot of physical infrastructure. We're still going to need a lot of energy and power to really make this future happen. So we continue to believe this. We think both of these areas, which are a major focus of our firm, will continue, but we're going to do it in this prudent way, and we're going to have to watch and see what happens to demand over time.
So, John, given all of that, do you think that the current environment is overbuilt? Would you be buying more data centers in this environment, or are you going to take a pause?
We're going to continue doing what we're doing. In fact, yesterday, Microsoft, I think on the call, said their revenue growth was constrained by not having enough data centers today. We're going to continue to build data centers so long as our tenants are demanding them. And as I said, I believe they're going to continue to need this because I think this AI is truly going to change so many things, but the use cases change. So we respond to their needs. That's what's the nice thing about this business. We've got the capability and scale. We've got an amazing company in the US and Europe, QTS, a great company also in Asia with AirTrunk. And these companies with their capabilities really deliver what the customers want. And what we're still seeing is hundreds of billions of dollars of CapEx spend. But what we do is tied directly to the demand signals we get from the customers.
Hey, John, one other AI-related question, and I know Steve Schwartzman was out in Davos last week where, of course, AI was the topic du jour. How is AI impacting your portfolio companies in terms of employment, hiring, and productivity? And I asked just because, we were talking to Mark Benioff last week, and he was saying that he is not going to be hiring any new engineers this year, in large part because AI is helping the current engineering class effectively produce all of the code that's needed. And so he doesn't need to add new people, which of course is going to help margin long term. Has that happened when you look at your portfolio yet?
I think it's very early days. I think we're beginning to see some signs of this, Andrew. Margins in our portfolio companies have been up 9 quarters in a row. We're still growing our hiring, but there's definitely a factor here where these tools are powerful. If you think about summarization or graphic design, translation, sort of mid-level coding capabilities, these tools are starting to work their way into businesses. And so if you want to be excited about the U.S. stock market, if I'm a viewer here, you could say we could see this real productivity boom. We could see margins at companies improve and also customers getting a better experience. So I do think it's a factor. I think it's really going to enhance efficiency at companies and improve customer experiences.
John Gray, it is always good to see you. Thank you for joining us and walking us through the numbers this morning. And I hope we have an opportunity to talk again very, very soon.
Thanks so much, guys.
That's Squawk Pod for today. Thanks for listening. As always, Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern or follow Squawk Pod wherever you like to listen. We'll meet you right back here tomorrow.